about your valuation framework, how you value a company and how to determine if it's under or over. What are you looking at?
Well, there are two aspects to this. One is what one might regard as one's fundamental valuation carried out by oneself, for oneself, on the assumption that one is or would be the only participant in the market. But of course, that is never the position. One has to decide when looking at a share price as to how other participants in the market, of which there are not thousands but millions, how they will look at the share price. And that's not easy. I certainly think, if I may revert to my reading list, including the Daily Mail, looking at the Daily Mail gives you an idea of the zeitgeist. You might say that's rather ridiculous, but it's the way people talk, the way they think. That is the basis of the zeitgeist, and that, I think, impacts very heavily on the way they think towards their money and their savings and what they will ultimately do by way of buying or selling a share. So I always study that.
Mm-hmm. Okay. Would that be the sort of, that's kind of the crucial thing for you then, if you're going to make a decision on a company?
Yes.
There are other elements.
Yes, well, as I said, there's the valuation which one might ascribe to the share if one were pricing it on the basis there would be no buying or selling because it was fairly priced. And then there's the addendum to that, which is what will the market in practice think about the share? That's not easy. In fact, it's really central to the skills provided by investment banks. They will tell you, if you're floating a company, they'll tell you what the market's attitude to such and such a stock will be. You see, they're in touch with the institutional investors, and in the end, it's institutional investment or disinvestment which will determine the price of a stock, particularly on the larger ones. The smaller stocks, of course, tend to be dominated by private investors. And again, the problem remains the same. How will people in practice be buying or selling a particular stock?
Can you just talk a bit about the process, your process, in a bit more detail for the viewers?
Well, I'm not sure that I do have a process. I would say that I naturally assemble facts in relation to a proposed trade, and that I am quite good at now. Well, damn it, I should be. I've been at it for a very long time. And I am naturally curious, so I'm drawn to looking at facts and looking out facts and comparing facts, looking at different sources, because this is an uncertain world where deception is the king. And I don't take a dogmatic view. For instance, I don't regard all facts as presented as fact. They often, on further inquiry, are not fact. So one has to keep an open mind.
Okay.
If you don't keep an open mind, you will be destroyed, that's for sure.
Have you been close to being destroyed ever?
Oh yes, definitely. But fortunately, many years ago, I set aside quite a lot of money in the names of my wife and my children. And so, provided they're prepared to be kind to me, I may be in the gutter, but I won't be lying in the gutter hungry, that's for sure.
Okay, interesting. In terms of trading strategies, describe your approach to trading.
Well, I don't have any formal approach to trading. I just open positions with a view to satiating my sense of greed, which we recovered earlier, of course. But I don't have any particular approach. My ears prick up when I hear something that's very interesting, and I start to think about things in a stock market context for that particular position. But these facts, these opportunities, keep emerging from different points. I don't think it's possible to categorize the way they emerge such that it could be said I've defined the way these things emerge. Not at all. Save in one respect, things often emerge with little or no notice.